Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Amelia Hawthorne, and today is the 3rd of July of 2023. Today, we're diving into the intriguing world of Apple Inc., the first publicly traded company to hit a whopping $3 trillion market cap milestone twice. So grab your cup of coffee, sit back, and let's talk numbers. In the first half of this year, Apple's shares have surged, rising an impressive 45 to 48% depending on the time of the snapshot. Now, Apple's market cap, that's the total market value of its outstanding shares, again exceeded the $3 trillion mark. That's a figure that's hard to fathom. It's $3,000 billion. This is a significant achievement considering the volatility and uncertainties clouding the global economy. Now, why is this happening? A part of it can be attributed to the robust performance of the broader tech sector. For context, the tech-heavy NASDAQ index itself has risen about 30% during the same period. This general uptrend in tech stocks is providing a strong tailwind for Apple's stellar performance. Now, let's break this down a bit. Analysts from Jefferies, a prominent global investment banking firm, foresee that Apple's stock could reach as high as $219 per share this year. That would be a substantial leap from the current trading price of around $193 per share. On the flip side, though, we've seen a slight dip in Apple's revenue. The iPhone giant reported a revenue of $94.8 billion in its recent fiscal quarter, representing a 3% year-over-year decrease. Despite this, there's excitement about Apple's venture into the virtual reality space with its Apple Vision Pro, a high-end spatial computer. Although it's a substantial investment at $3,499, it represents Apple's first steps into a potentially massive new market. Interestingly, Apple has also been extending its global footprint. Earlier this year, the company launched its first stores in India, along with a manufacturing plant in Chennai. This strategic move is aimed at diversifying its supply chains and driving down the manufacturing costs of its flagship iPhones. This journey of Apple's valuation is somewhat of a financial marvel. It was less than 2 years ago that we saw Apple first cross the $2 trillion threshold, and now, 2 years on, we're looking at a $3 trillion behemoth, towering above the 4 other American members of the $1 trillion club: Microsoft, Alphabet, Amazon, and NVIDIA. Quite the feat. So what lies ahead for Apple? Well, the tech giant's future is certainly promising, with potential value projected as high as $3.5 trillion by fiscal 2025, according to some analysts. With Apple's history of innovation and adaptability, and considering its potential in the realm of services revenue, it would be no surprise if Apple continues its upward march. And to give us more perspective on this, I'm pleased to introduce our collaborator, Jason Reynolds. Hello, Jason.
Hello, Amelia, and thank you for the warm welcome. Now, when it comes to Apple Inc., there's certainly a lot to unpack. Hitting the $3 trillion market value, as you've mentioned, marks a historical moment for Apple, and it's a testament to big tech's powerful presence in equity markets. This impressive valuation isn't just the result of a strong performance this year, but a steady, decade-long growth trajectory and a business strategy that consistently delivers. Remember, Apple first became the world's most valuable stock back in 2011, when its market cap was under $340 billion, and since then, it has rarely given up that title. It reached $1 trillion in value in mid-2018 and a $2 trillion valuation in August 2020, establishing itself as the first U.S. company to cross that milestone. Investors are optimistic about Apple's future, not without reason. The company's strong balance sheet, stable revenue streams, and formidable competitive position are all critical factors. More specifically, the growth potential lies in areas such as artificial intelligence and robust consumer engagement, with people reportedly spending an average of 4 hours a day on their devices. Adding to this, Apple's active stock repurchase program and its ability to grow dividends are also crucial aspects that bolster investor confidence. An example of this optimism comes from Citi, which recently initiated coverage of Apple with a buy rating, citing an underappreciated potential for expanding margins. However, it's essential to remember that a $3 trillion valuation doesn't necessarily promise an unobstructed journey ahead. Despite trading at around 30 times forward earnings, which is higher than its 10-year average multiple, Apple's current stock price is above the average analyst price target. This indicates that the market may not be expecting substantial gains from current levels. That said, Apple's market influence is indisputable. As it stands, the company accounts for a significant 7.7% weight of the S&P 500 index. But in the dynamic landscape of financial markets, the future can only be anticipated, not guaranteed. It'll be interesting to watch the trajectory of this tech giant in the coming months and years. Back to you.
Many thanks, Jason. There you have it, a quick dive into Apple's $3 trillion milestone. As always, it's important to remember that these markets are subject to fluctuations and changes. And while we aim to keep you informed, we advise doing your own research before making any significant financial decisions. As always, do your research, stay informed, and approach any investment decision with care. Thank you for joining us, and we look forward to bringing you more insights in our next episode.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.